please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Sunil Subramaniam, the CEO of Sundaram Mutual Fund, joins in to discuss the fundamentals of the market now. Sunil, hi. Thanks very much for joining in. Well, we've seen this kind of range-bound trade, but we still seem to be quite precariously poised. Do you think that we're eventually going to slip below that 10,000 mark and probably test the recent lows?
It's quite possible. We are in for a volatile phase, and in volatility there could be new lows and could be new highs, because I think the news flow is at a very heightened level, both because of the domestic election scenario, right? You will have opinion polls, then you'll have voting percentages, then you'll have exit polls, then you'll have actual results. So there is enough noise to create tension. So I think that's domestic. Internationally, it's even more worse, because the 3 T's are at play: Trump, trade and tweets. And it's also the run-up to the November Senate elections in the US, right? So we would attribute some portion of all this rhetoric to the need to win that election for the Republican Party, because otherwise Trump will become a lame duck president if he doesn't have the Congress majority to execute the executive orders that a president does. It's ineffectual. What happened to Barack Obama in his second half of his second tenure? So I think the uncertainty is here to stay, and the recovery in the US. So I think that's one thing we have to bear in mind, that economically, world and India, the story is getting better. But the economics better story means market flows are going to divert itself from uncertain areas to certain areas, which is advanced countries. And as advanced countries recover in growth, it is the commodity sensitive, intensive countries whose demand is going to go up. So an FII would also first reallocate back into an advanced country, because the better growth prospects at a lower risk. Second, cost of funding, because interest rates follow the growth cycle. His cost of funding, so the hot money, which is borrow, leverage, invest in markets, will tend to go back into the US because there's less risk in the US. But second, even within the emerging market flow, he would prefer a commodity-oriented emerging market like a Brazil, Russia or a South Africa, because the valuation of those companies are going to give him a short-term ping, whereas India is a more a long-term story play. So the reallocation of FII money as it flows out, both on news and on actuals, will lead to a significant degree of volatility, especially in the top 100, 150 stocks. So I think for the next 6 months, guaranteed, but another 6 months, if these results don't go so well, then your parliamentary election result is also not going to be that clear-cut. So the volatility can continue. So I think there is, so is it going to touch new lows? I would say both. It will touch new lows and new highs. That's what
Over a period of what?
6 months first, and by the 6 months you'll get a clarity both on the US situation and the Indian situation. And if there's uncertainty persisting, then till the general election result, this uncertainty can continue. It can end in 6 months, or it can continue for another 6 months.
You know, sell-side brokers usually say base case, blue sky
forecast
scenario, and bear case.
Correct.
So on a base case, what would you say? A year from now would be around the same levels on the market?
A year from now, I would expect it to be 5 to 10% higher. Because a year from now, right, I think there will be a significant degree of clarity on that parliamentary election. Before that election, you'll know kya ho raha hai. So that clarity, as long as the election uncertainty gets over the market, so the economic growth, that is the earnings growth.
What happens if the state elections don't go like the markets would like them to go?
If it doesn't go, then in the run-up till the next election.
Because if state elections go, the BJP wins, then we may get a pre-election rally as well.
Yes.
It's happened before.
Correct.
But if that doesn't happen, then it's a big if, right?
Correct, but I'm just saying the economic, if you look at it, I would expect the earnings to be 20% higher for the broader market from today, right? So I'm just saying if the market is going to be 5 to 10% higher, I'm saying the market is not fully giving the reward for the 20% earnings growth. So even in a base case scenario, unless you are extremely depressed, in which case market would be flat or even lower than today, in a base case I would expect a 10% hike because earnings are going to be 20% higher.
Okay. Before, Sunil, before we let you go, 1 year from now, we spoke briefly in terms of what you expect for the markets, but where do you expect PSU banks to be 1 year from now?
I think that 1 year from now the story will be much better on PSU banks, because starting with today's policy, I do expect RBI to announce a lot of significant moves, and I don't know whether they're going to have the thing to take those dramatic moves today, but over the next 1 year, they will have to do dramatic moves, which is they have to pull out the toxic assets into a separate vehicle. They'll have to merge this large number of PSU banks into a few, 4, 5 larger banks.
But you expect them to take such difficult decisions ahead of a national election, the government? Because
lending, banks, if they continue in this situation, will not be able to lend. And if public sector banks don't get back into a lending mode, the economic recovery itself is going to get impacted. Because, credit is the fuel for the economy. So I think that the imperative for the government to fix the PSU bank problem is imperative, and it will happen whether the election, whichever way the election goes. I don't think that they can delay that fix.
Okay.
The market's doing just fine. We're up about 140 points. So actually there has been some pickup from the time that we took that break. I mean, actually even from the last 15 minutes, the Nifty has moved up another 10-15 points. We have the CMI, which puts out the quarterly capacity, new project and capacity data in the economy. And we've got the latest data for the quarter ended March, which has come in, and the numbers don't look all that great. Mahesh Vyas is the Managing Director and CEO at CMI, and he's joining us on the show. Mr. Vyas, thanks very much. Good morning. What's the most important number, or the most important 2 or 3 numbers that we should pay attention to according to you?
Well, there are 3 takeaways from the capex numbers around now. So we have the quarter ended March 18, and we also have information for the year ended 2017-18. So I think the most important thing would be to look at the year as a whole, because the March 18 numbers will undergo some updations, some revisions, whereas the annual numbers are a relatively more stable number. So what we see in the annual numbers is that there is a fall in investments. We have been seeing this for some time now, but 17-18 seems to have been the worst for very many years. The second takeaway is that there is a fall in completion of projects, which ties in with the story of a fall in new investments. And the third takeaway, which is new, is that there is a sharp increase in projects getting abandoned. So we have 3 stories: a fall in investments, which is a continuation, a fall in completions, which is also a continuation, and there is a sharp increase in abandoning of projects.
What do you mean, Mahesh, by abandoning of projects? Which sectors are you seeing this in, and what might the reason or the rationale behind it be?
See, many large infrastructure projects that were announced in the times when, this was boom time and everybody was investing or proposing lots of investments. Many projects get announced that are not really viable, and there are difficulties in them. The difficulties could be in land acquisition, could be in other viability issues. So when the cycle turns and you have this sustained slowdown in the economy and slowdown in investments in general, you start seeing excess capacities, and you start knocking off those projects that don't seem to make sense. And this is what has happened. A large number of projects that were earlier classified as implementation stalled have now been classified as abandoned, because we have got information from official sources that there is no hope of these projects actually taking off, and it's best to classify them as abandoned.
While the annual numbers, as you said, are more stable, right, less prone to changes, while the quarterly numbers may undergo some updation. But would it be instructive to look at the recent quarters to see, while the year shows us there's been a big 50% drop in new project announcements, etc., have things started to pick up the last 2 quarters compared to, say, the previous 2 quarters before that?
So there is some seasonality in this. March usually does show better numbers than the previous quarters, and I think one needs to adjust the numbers for that seasonality. And the second issue is that there will be some revision in these numbers. So we have also changed our methodology, wherein we do incorporate updations even in new projects. So I think one should wait, and the revisions can be substantive if you look at the quarterly numbers. But the quarters of June, September, and to a large extent even December are already revised. So I believe that looking at the annual numbers make more sense than looking at the quarterly numbers for these two reasons.
Okay. All right, Mahesh, just hold that thought. We have important news coming in on Binani Cement, and I think we have Ashmit with us to take us through it. Ashmit, just put this news into context for us.
Ekta, basically this was, NCLAT, which is the appellate tribunal, was listening to Dalmia's plea challenging an out-of-court settlement between Binani Cement and basically lenders Binani Cement and Ultratech. So they were challenging this, and the news seems to suggest that the appellate tribunal has refused to stay an out-of-court settlement between. So this is actually positive for any proposed deal which Ultratech may actually, via Binani Industries, put to the lenders for Binani Cements. So that's basically, I think, the long and short of it in terms of what this would mean. And I think we reported yesterday, I think Nisha reported the terms of what's being offered, etc. as well. So we have that as well.
And we had Ritu in the morning reporting that the banks have asked Binani Industries to in fact revise the settlement offer to over 8,000 odd crores, and the case eventually... So
the numbers will, they'll have to work out the numbers in terms of what actually is agreeable to both parties. But I think this is an issue of principle. And on the issue of principle, the NCLAT is essentially saying that, you guys can settle out of court, and there's no problem with regards to that. Now, of course, can they reach a settlement? Can, Ultratech offer, I think they were offering 7,300 odd crores or so. Yeah. Banks wanted 8,000 crores plus. Will Ultratech match up to the demand that banks are making? That remains to be seen. But this can be settled out of court. That matter of principle, I think, at the NCLAT, the appellate tribunal level, has been now settled. We'll get more, maybe a reaction or two on this.
Mahesh Vyas of CMIE is still with us. Mahesh, there's been a lot of traction which has come in on the power space. What exactly are you noticing when it comes to new projects as well as stalled projects picking up?
No, there is no traction in the power sector. So it's been a long time since we have seen a large thermal or other power projects actually being proposed or even being made progress on. So there will be a few projects whose implementation will nudge a little further. That's bound to happen. There's a lot in the pipeline which is there in the power sector. But in terms of completion of projects, they are mostly getting postponed. The total capacity that is scheduled to get completed has fallen quite substantially, and there isn't much investment, new investments happening in the power sector. The peaking of this was of the order of about 8 trillion rupees worth of new investments into power sector a few years ago, and now we see less than only around 1.5 trillion rupees worth of new investments in the power sector. So that's really a big fall from what the peak was.
Mahesh, with regards to this IBC NCLT process, a lot of the big cases are only coming to some sort of a resolution point now. Do you think that will have any impact on the, the projects that you track, the universe of projects that you track in a positive way in the coming months?
Well, a large number of entrepreneurs are actively involved in exploring the possibility of taking over many of these stressed assets. So instead of focusing on creating new assets, a large amount of the attention will have been diverted towards acquiring available assets that are already stressed. So I think the initial impact of the current restructuring and re-ownership of these stressed assets is happening will only have a slightly negative impact upon the implementation of projects. Not that that's a bad thing. In fact, a lot of this that we look at in the investment segment should not be seen as good or bad, because these are business cycles. And NCLT and IBC and the rest of it, which is trying to ensure that the stressed assets are recovered in some fashion, is going to have a positive impact on the economy, but on the investments, it's possible it will have a negative impact.